Most investors don't fail because they've picked the wrong property. They fail because they picked the wrong location. And in 2026, with more data and more noise than ever, these mistakes are happening more frequently, not less. If you get the location wrong, everything else becomes harder. Hello everyone, I'm Kate Hill, and if you're ready to build real wealth through your smart, no-nonsense property decisions, you are in the right place. Today we are diving into the 3 most common location mistakes that everyone makes even now in 2026. Location has always been the foundation of property investing, but the way investors choose locations has not kept up with how the market has changed. There are endless suburb datas, online tools, chat rooms, opinions floating around, finfluencers. It's easy to feel like you're making an informed decision when in reality you are missing the bigger picture. So let's break down 3 of the most common location mistakes that property investors are still making and how you can avoid them. Mistake number 1, chasing price instead of potential. And this is by far the most common mistake that I see. Investors start with a budget, say $700,000, and then they look for the cheapest suburb they can find within that price range. On the surface, it feels logical, but price alone does not tell you anything about growth potential. Cheap does not always mean undervalued, and sometimes it can mean there's a lack of demand, a limited infrastructure, weak economic drivers. The better approach would be to start with areas that have strong fundamentals, population growth, employment hubs, infrastructure investment, and then find what fits your budget within those areas. Buying cheap in the wrong location will cost you far more in missed capital growth than paying slightly more in the right location. If you're finding all my content helpful, please hit subscribe. I do share a lot of strategies and insights that help you grow long-term wealth through smart property investing. Mistake number 2, following the crowd or the headlines. My God, you have seen those headlines, the top 10 suburbs to buy in 26. The problem, by the time it's news, it's already on everyone else's radar, and they might not actually be in the top 10. And the top 10 for who anyway? Who are these people talking about? All those headlines are there and they are designed to make you buy the content. It is not strategy and personal property investment advice for you. Beware. Investors pile into the same locations often. Competition increases and suddenly you're overpaying for average stock in a hot market. This is how emotional decision-making creeps in. Fear of missing out replaces actual strategy. Smart investors do not chase what's already popular. They look for areas with emerging fundamentals, where demand is building and consistent, not peaking. And this is where the real opportunity sits. Mistake number 3, not matching the location to your strategy. Not every location and not every property type suits every investor. I cannot stress this enough. If your goal is strong capital growth, you need locations with owner-occupier appeal, limited supply, long-term demand drivers. If your focus is cash flow, you might prioritize higher yielding areas but still within markets that have sustainable demand. The mistake investors make is trying to force a suburb to fit their goals instead of finding a suburb that naturally aligns with them. This is where a lot of frustration can come from. The numbers don't stack up, the growth doesn't come, the strategy feels off because it is. Smart investors do this differently. They don't start with the suburb, they start with the strategy, and then they filter the entire market based on what actually supports that strategy. Budget, risk profile, long-term goals, and we narrow it down to a handful of high-quality locations. It's structured and it's deliberate and it removes the guesswork. I've talked about this before. It's exactly where our Property Pathway location guidance service comes in. We don't hand you a list of random suburbs. We take your goals and map them against the entire Australian market and present a small number of locations that genuinely fit you. No chasing headlines, no guesswork, clear, backed research and direction. Location mistakes are costly, not because they're obvious, but because they are subtle. I have been there, I promise you. They look logical at the time, they feel like good decisions, but over the long term, they can be the difference between a property that performs and one that does not. Get the location right and everything else becomes easier. Thank you so much for watching, everyone. If you are serious about building real wealth through smart, well-researched property decisions, stick around. There is a lot here to support your journey, and I will see you in the next video. Bye.